All right, I've got the stream started. Let's get the screen on. There we go. Billy Ray, I saw your message about invites for the new platform. They just haven't gone out yet. You missed nothing. I'll definitely let everyone know. I'm hoping, to get some work on it this week in order to give the weekend for it. But we'll see. So it's in the works. I'm gonna move pretty aggressively on it. I just don't know exactly when I'll send those invites out. So good morning, Bob. Good to see you. Good morning, Wilbur. All right. Well, you should see my screen now as well. We'll give it just another minute or two to see if we get any other stragglers popping in late. Coffee time indeed, Miguel. I was just getting my coaster arranged so that it's within reach. Yes. Good morning. Oh, and Sandy made it. Oh, everybody's here. All right, one more minute and we'll crack. We'll get cracking. Phenomenal. Okay. Let me hit record. And officially, good morning, happy Monday. Welcome out to the Market Watch Group weekly opening bell. My name is Scott. I always think it's funny as we look at the timing because it's been less than 24 hours, but it's so different, right? We met at 11 a.m. yesterday. Look at the market, get a sense of everything going on. We do that very purposely to find that weekend gap when we've decompressed. We can analyze market conditions very objectively. And then what? Now we're connecting posture to opening market. How are we trading it? Now we're trying to sync. The objective here is the transition. I mean, of course, you can think about it a little bit at the time, but you don't know what the futures, you don't know what the market's going to look like. You can't really be like, here's my trading posture. Well, you don't know. Now we can look at the futures. That's the connection. That's right. So if anyone's ever like, man, you don't even have a full day in between. Nothing's changed. Everything's changed. Because now you're connecting posture, market posture to trading posture. So let's get into it. As always, not brokers, not advisors. We don't give advice or recommendations. This is for education, illustrative purposes only. Our agenda, let's look at the opening futures, the news, think about the economic calendar, connect it to our posture. Mindset for open trades. Well, it's bullish. Our futures are up, other than on the Dow. The large caps are down a little bit, but everything else is looking as it should. So it's like, oh, okay, great. The trades you opened, the trades you carried, you're thinking there's a good chance that they're going to continue moving in my favor. Great. If there's trades that you are looking for confirmation in order to get into a new trade, it's pulled back and you're just waiting for the buyers. Well, today may be that. So my connection from market posture to trading posture is favorable as I look at how I see the market and how I see what's developing today. We'll watch the opening range. We'll look at our early week opportunity list and remind you the big push, the last cycle of 2024 to get a good chunk of work on your trading plan. And go from there. Okay. Okay. The new format here. These two are grocery shopping. They look pretty enthralled and happy there in the produce section. I'm not sure the connection. Retail sales, big bank, Netflix earnings. Why Tesla's robo-time. I'm trying to orient myself to this new format. Anybody else? I'm like, okay, what do we have here? It should be like these are the biggest news. Futures rise, bull market. This bull market is 2 years old. Is it 2 years old? I'm going to have to agree with Bob. I like the old one better too. This bull market, that's not true. I mean, if you go from the bottom, but you don't actually call it a bull market until it's recovered to a certain amount. That article is actually technically wrong. You can see what it's doing is it's taking like, here we are, and if you go back 2 years, that's the bottom. So you're like from the bottom of the bear market to now, it's been 2 years. This didn't even recover until yeah, I mean, I would say we've been in this bull market since here. 1 year. It's 1 year we've been in this bull market. I mean, technically, you could maybe go back here. Maybe you could start it here and say 18 months. Because at this point, we had the first higher low, confirmed higher low. Yeah, I'd say 18 months. I think they're going back from here to here, and this is 2022. This is the start of 2023. So this is October 2023. I'd say strong bull market for 1 year. That's when here to here. I would say this bull market started right around this time. The rest of this was shaking off the bear. You don't count that as the bull. You don't say the bull started as at the bottom of the bearish bottom. Like, what are you talking about? I'm like, that doesn't make sense. I don't think that sounds right. Come on, Yahoo. You're better than that. No, you're probably not. What else do we have in here? Tesla's robo-taxi sell-off. I mean, see, I don't know, Steven. I'm not even gonna. I don't think you can. You can't take the very bottom of a bear market and then, in hindsight, go be like, "That's the start of the bull." To hell with that. No way. Not for me. 18 months at best. March, April of 2023. That's when it started. Yeah, it's really hard, I find, to process the news, actually. I don't like it at all. Can I go back to the old way? Does anybody know? I don't like it. Futures, though, are over here, I guess. 26 up for 0.26 up for the S&P. Flat for the Russell. Oil's down 2%. I said I thought it was a little overblown. The reaction. It looks like we're going to settle back down. Gold is flat. Nasdaq's up 0.5%. So Nasdaq and S&P are up. Dow and Russell are flat. This week we have nothing today because it's they took the option of going back. So you used to be able to. Now you're stuck with this nonsense. Yeah, oh, this is what you've been looking at. It looks like this. Mine. If you go watch the videos, you'll see that mine was very different last week. Even like these things were up here across the top. Very, very different. Yeah, I like it better. I mean, the link is just finance.yahoo.com. So it may just be regionally where what you connect with. They change content based on regions, you know. Okay, so today I don't know why my calendar. There we go. Federal Reserve. It's Columbus Day. The bond market's closed. Banks are closed. Fed Chris Waller speaking. We don't really care about that. Tomorrow, Empire State Manufacturing Survey. No. Fed. No. Wednesday. No. Excuse me. Man, I gotta tell you, this Market Watch page. Okay, Thursday. A little bit. Retail sales. Capacity utilization, industrial production. A little bit of housing. We've got Chris Waller twice, but we don't have Goolsby at all. It's just not a good week. It's never Goolsby. Oh, by the way, I got an email from Sandy. She sent me some lyrics to a Goolsby song. It's amazing. I might share it at some point. For now, it's just going to be for my enjoyment. Okay. So recent chat regarding the strength in the jobs had people think, oh, maybe the Fed's not. But I got to tell you, it still looks like we're going to get 0.25%. We are 24 days away. And there's our opening bell. Yeah, I think we'll get another 0.25%. So, that'll be interesting. Is this what you were referring to? Yeah, it used to go across the top. And then you'd have a main article and two on the side. And then all the rest of the articles would run vertically. Instead, now you have like 3 columns of articles. It's just a different format. It was just better. Okay. If you missed it, our posture stayed the same. Mine stayed the same. Everyone's in a pretty good level of alignment right now. You can see that for the past going on, 3 months now, we just nice and steady. We haven't seen it kick up. Last year, coming out of the October correction is when the market ultimately kicked into what I called like this strong bull market we've had for the last year. I think we're likely to see it reinvigorated. So I'm going to put my time, I'm going to say 18 months. I'll give it 18 months. Average length of a bull market is 2.5 years. 2.5 to 3 years. Average length of a bear market, 9 to 12 months. Interesting statistics for you. So, if you want to see this format, click on news next to my portfolio. Okay, I'll give it a shot. Boom. Boom. Kind of, right? You can kind of see it's... Mine still puts it over here on the side. I get one article, then one column. I don't know. Yahoo's just... I don't know about Yahoo. Select latest news. Oh, okay. We'll try that. Latest news has a different format even still. They did right, Sandy? Thank you. Yeah. Click on original. Wait, where does it say original? Original recipe. That's definitely what I want. Am I missing where that is? Under new... Oh, originals. I don't know. Feels like too much work to me. Feels like I'm having to do more than I should. So, was there anything else we needed to look at? Market's open? Nah, let's just go look at the market. Let's just go look at the market. So there it is, gap up. Still moving higher. I almost, by way of adjustments, I almost raised my short term to a 2. That was one place where I was like, maybe, and that would have. But I do feel like we have a pretty good read on what's happening here. Market opened up a little bit. Let's go look at the VIX because the VIX is one source of concern. It's holding on. Even now, the market is at highest highs. The highest of all highs. And what is the VIX doing? Holding at 20. 20? What? Why 20? I don't know why. But I recognize that the VIX is holding on to some fear. Okay. What does that mean? It means I have a thought for a hedge, locked and loaded, so that if things start to turn, I can get it on very quickly. I've got alerts. If the VIX, and I'm looking at like this high here, 21.16, this high here, 21.39, so maybe 21.50. If the VIX breaks 21.50, there's a good chance, and as it continues to come down, because I can't get a sense as to why it's holding on. Steven says, upcoming election. I mean, that's still weeks away. The VIX doesn't tend to be that predictive. So maybe it's just holding on to some apprehension about it. And it's interesting, right? Because what are the nerves? The nerves about the election. It's not who. That's not what the market's nervous about. And interestingly, and I've said this before, around elections, having been coaching and trading for as long as I have, I can always tell somebody's political affiliation based on how they project the stock market will behave based on if their candidate is elected and it's favorable, or the other candidate is elected and they're like, oh, if so-and-so gets elected, the market's going to crash because blah, 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 right? They, we saw it. I believe Trump in 2020 predicted that if Biden got elected, we'd have a 1920 style Great Depression, the stock market would crash. And here we are, more all-time highs. 2016, same exact thing happened. Oh, if Trump gets elected, the stock market's going to crash. 2017 was amazing. It was bullish. Look, the market doesn't care who. The market cares if. Like, is there a peaceful transfer of power when there was uncertainty around peaceful transfer of power last time? The market got rattled. When we had a lawsuit and take it to the courts to decide who won Florida back in 2000 and whatever that was. 2004? It was 04. Then the market gets a little rattled. Uncertainty. So maybe some uncertainty about that. The war in Israel, I mean, oil seems to be adjusting down already. Let's look at that for just a second. Okay, maybe not all the way down, but it's somewhat down. Let's go through the watch list. Let's go look at the things that we're looking at. It didn't crash, but produced a VIX. The war in Israel, you're saying? Put that VIX out there? No. I mean, look, the great overreaction of 24. Yes. That VIX was insane and insanely unwarranted. That's what I meant. Apple back on track, back in right. So we talk about patience. We talk about the trajectory. Oh, looks fine. Aflac, good. It's up a little bit as we would like to think it should be. Amazon, if you were in that one, it's just kind of pausing. AXP, that one could be a remnant still. So I don't know. Bank of America pausing. BK pausing. BLDR still grinding sideways. Carrier kind of sideways. Caterpillar gave it all back. And what is going on with Caterpillar? Big up day Friday, gave it all back, and then some today. 3 days worth. What is happening there? CMG continues to just kind of push it out. Costco maybe setting up. The Dow, easy there. Fastenal, waiting for a pullback. Bitcoin, I don't know. What do you make of it? All right. GE. Kind of both of the GE stocks we're watching continue to move a little bit there. Gold is kind of sideways. Google. So I think Google is valid. I think Google was valid on Friday. So if you took it Friday, you're getting a little bit. If you didn't take it Friday, you can ask yourself, do I like this confirmation? Remember, Friday would have been like, oh, do we think that's the last red before the first green? Yes, that's what we're seeing. I like that. I think Google's viable. Home Depot is setting up. Could be a trade this week. IWM, a little overextended. We'll see what's going on there. KKR just kind of keeps going, but it's really running out of steam. It's taken We're now a day past what we thought we would be. It just never got up there. So we got a little bit of ground, but not much. MasterCard. What I'm saying about KKR is we've kind of given it as much as we can at this point, right? Mickey Donald's. Meta, maybe. MMM. So I said I kept MMM as a consumer staple, but as I look at it, I'm like, no, I feel like I'm going to get rid of it. Morgan Stanley pushing to new high. Microsoft. Okay, Microsoft. Doing your thing. Trying to get some tech action moving. The big one moving. We love it. I love it. Magnificent. NDAQ. I don't know. Like I might actually look at that as a setup. Maybe. Netflix. NRG. So here it is. NRG, PEG, SO, and VST. You can see that, I mean, SO is probably the least like volatile, so it's like got more stability. I would say NRG looks like it's got some vol to it. I don't know. If it stays like this, I would say it does look like utilities might be kicking out a signal today as well. So all of you who said maybe I would trade utilities, I guess you guys and me better be thinking about how that would look. Okay. NVIDIA. Look at NVIDIA, up 2%. PEG looks close and possibly ready to go. If I were to take this trade, I would probably wait until it's confirmed a little, and then I would cut this shadow off and just use the body to help. I wouldn't put my stop way down here probably. PGR, no. PLTR. Still pushing a little, PLTR. Just relax. Come on back. Give us a new trade now. QQQ. I mean, things look good. SO looks set up. SPY is pushing higher. We're up almost 0.5% now. Tesla just keeps on dipping down. Down, dipping dog. TSM. Oh, TSM still looking so nice. I've got a couple more days on that before earnings. Love it. UUP, the dollar. Yeah, I don't love the dollar all the way back up here. We worked so hard and waited so long for it to kind of ease. And then it just was like, bloop, pop back up. The VIX just holding on. I mean, look at that. Market's up 0.5%. VIX is just like, shrugging it off. Yeah, there's something that the institutions don't love that has them, you know. Okay. On Friday, I said I didn't like the Duke broke the 50. Yeah, let me get through the rest of this and we'll pop over. Here's another of our utilities that we did like. You'll notice it's just higher highs, higher lows, well above its 50. This one is not well above its 50, but just kind of meanders. It got close to it and then it bounces off stronger. If you look at PEG, not PGR, PEG stayed above the 50, right? You can see that there. NRG. So you can see it did creep a little below at one point, but not by much. NEE is another one, Press says. Let's put that in, and then we'll go look at Duke and just kind of see why. So that Nextera, you can see, got right around it. Now, if I go look at Duke, I want you to notice that it wasn't just that it broke below the 50, but it did it with this candle, and it had this volume. Like a big smash through the 50, all the way down. And then now as it's coming back up, you'll notice that the rest of those are setting up for a new move. This thing's already moved for 4 days. And as it moved for 4 days, it finds itself bumping underneath the bottom of this old range, not getting back up to this part of this old range. If it got all the way back up to that point, I'll be like, all right, the buyers are still, pushing this thing around. But right now, I'm saying, even with this volume, big volume, and then it just sort of dried up, and now we're just like, oh, shit. So that transition for me makes it look and feel weaker than something like this that's still kind of buoyant, staying up above on top of that 50-day. That's it. Okay, let's go look at the X's. Oh yeah, Walmart. XLB, Basic Materials. Basic Materials is, it's bouncing, but it's kind of stalled, but it's in the bounce. I'm still bullish on that. Definitely bullish on communication services. Energy, I think it's looking a little iffy. Financials looks very strong still. Industrials looks very strong. Industrials is where we're going to run a little searching tomorrow night during our foundations sessions. Technology look at technology. Like, yeah, we're back. Guess who's back? Staples, under the 50, having a hard time getting back above the 50. That same kind of a thought process, right? Where we're like, hold on here. Utilities, right? Just like what we saw in the groups. If you didn't like the groups, this is a viable option. XLU trades 13 million shares a day. There's plenty here. Probably even a... Now, remember, when I have this, I don't necessarily just go underneath the bottom. I actually would like to use a little below the body of the red day rather than the bottom of the red day. So I could take this trade with $1 of risk. Can I get to a new high up here at 83.50? That's 4-1 on XLU. That may be where I go. I might just go XLU. As I look at it, why not? It's a good combination, a good blend of those other ones. Little bit more strength than SO, but not quite the volatility of those other ones while maintaining the trend. Give me your thoughts. Here is healthcare. Healthcare is down. Healthcare is down a little bit, struggling to get back up to the old highs. XLY, Staples. Staples got to make their move. They got a signal. Now they're on a hiccup. They've got to come out of this if they're going to continue to contribute from a sector standpoint. Yeah. So, yeah. Yes. Looks good. Trades I'm in look good. Setups I have look good. I would expect a couple of setups. I would expect things to continue moving. Certainly, I'm going to continue watching the VIX. I'm going to have alerts set where it's like, hey, if the VIX does this, I don't love it. But for now, I'm going to keep on keeping on. Real quickly, we have a little bit of, look at us getting through this today. Trading plan. Trading plan. I want you to expect to be a part of the Market Watch group forever. We'll always be around together as a trading / best friends club. We hang out. We, navigate the markets together. But, yes, but let's just prepare, hope for the best and prepare for the worst. So what happens if you find yourself, whatever reason, on your own? I want your market forecast, market posture to be the strongest part of what you do. It's why we call the name of the group Market Watch, right? That's the anchor. We anchor to how we see the market. If we can just keep a good read on the market, adapt quickly if things shift, we should find ourselves on the right side of trading most of the time. That's it. Oh, I love it. My daughter is a huge Stitch fan. That's her favorite Disney of all time. So, love it. I've got stitches all over my house. Still. She's almost 20. Okay. Yes, but the point is that routine that we all do together, that's the routine that I hope resonates when I'm done with people from a coaching or mentoring standpoint, that they're like, hey, I don't have to be overwhelmed or intimidated by the market itself. If we can just get that comfort where we're like, look, we've got some advantages. I can move quickly. I can adapt quickly. I can shift way faster than institutions ever can, right? That's my edge. So if we can see it, we can trade it. That's it. So spend a little time defining them. I did it already. Like we've said before, no need to reinvent the wheel. Best thing to do, steal and adapt. Steal it, change it a little bit to your words, make whatever adjustments you need to. Real good push, because our goal is not, hey, let's start a new trading plan at the beginning of the year. No, our goal is let's get this trading plan in place and execute it. Maybe for a month or two, at least a month. But we may actually turn off trading plan development for the first month or two of trading 2025 for execution. Let's execute. That's the New Year's resolution. Not let's build a plan. Let's build it now and execute it at the start of the year perfectly. So, awesome. Whew. We've got a few minutes. Did I miss anything? Any symbols that you wanted to look at that I didn't look at? Let's take a quick peek. How the opening range looks, continuing to expand. Yeah, look at that. It's looking strong today. The market looks strong overall. We're bullish. It's turning into fall. Football season on. I mean, what could you want? Life is good. Life is good. Phenomenal question. What primary target would you set? Probably would look at just kind of the trajectory overall and So I would maybe draw a couple things. I'd maybe look at something like this, and then I'd go like, we've got something like, something like this. Because that was a big one there, right? And I'd maybe take even this one here where we had a pretty good run. Those are the, and there's one here too. And I'm going to pick which one of these I think it's a little smaller and longer than that. A little bigger than that. About the same, a little smaller than that. I'd say that would be a conservative. That's barely a higher high. The other thing I might look at is something like we had a bigger dip, of course. So we do want to acknowledge that. Why wouldn't recency take? Yeah, I mean, you could. It's also one of the two biggest. So I would say if at this level here, I'm getting about 3-1 on the trade. But I do think I could maybe even put something a little higher up and get that fourth dollar out of it, right? That's kind of what I'm thinking. Give me your thoughts. %, using Heikkens. Okay. Where would that put your target at? I would probably say I'd probably actually put my target at 83.50, like 83.60, 83.50, something like that. Up in this area here. And I'd probably put my first take profit at 82, something like that. Yeah. We'll see what that looks like. Anyways. All right. Well, good. Good question. Way to wrap it up with some trading principles. Good to see everybody. Tonight, 6:30. We're on for happy hour. We'll shoot the shit and say hello. Tomorrow, 8 p.m. Eastern, we've got a full round of trading foundations. So, yeah, plenty to do, plenty to talk about, good stuff going on. Good to see everyone, as always. Happy trading. Go Dodgers, and go Dodgers.